So as a quick introduction, let me start on the far left. It's Ida Tin from Clue, founder and CEO of Clue, the female health app, which you founded after, I'd like to call it a real world entrepreneurship, where you did like totally different stuff and organizing motorbike tours through deserts and realizing the need for a female health app. And you didn't stick to it as just an idea, but you actually decided to build it, and you built it here in Berlin. And you are growing quite impressively, and we are going to talk more about this through the course of the next half hour. Next to Ida, we have Julia from Mosaic Ventures. Really glad to have you here from London. Julia, you recently joined Mosaic in London, coming from the US, from NEA, one of the foremost VCs in the US on the West Coast. So, and you really came with a mission and drive to bring your expertise to support the European ecosystem, which is fantastic. So, looking forward to hear also about your experiences in the US and your fresh perspective on Europe. Next to Julia is Lucian from KKR. Lucian, you are very active. KKR is very well known on the private equity side, but more recently investing heavily and being very active in the whole tech and growth startup system. You are one of the people spearheading that effort throughout Germany, Israel, the US, and looking forward to getting your comparative perspective there. And last but not least, Johannes. Great to have you with us. You're the CEO of GetYourGuide, the leading global online booking portal for events all around travel and the kind of experiencing a city. One of the fastest growing and most successful digital companies in Berlin. Started out in Zurich, came here. There's also quite an international board. And as this is a topic, really looking forward to your perspective on the interaction. So that's it in a nutshell. So let me start with one question, maybe on the far left, Ida. What do you, as a founder and CEO, expect from your board? Wouldn't it be better to be left alone? You can do your business all day long, and there wouldn't be any.
From my board? Well, first of all, I hope that I have managed to get a great board together, so that it's people that I truly trust, care about the vision that I have for the company, that it's people that I can have a fruitful conversation with, not too much ego in the room. Then I want them to help me think about kind of everything from, all the things that happen between the board meetings, which is like operational stuff, like how are we going to think about this? Can you do a check on that person? To the board meetings where we try to have conversations that are more strategic and more high level. And I want them to listen a lot and really try to understand maybe before they have an opinion. I have a fantastic board. I'm very grateful. I think they're doing a great job. Yeah.
Well, just one follow-up question. What makes it fantastic?
So I think people come with very different experiences and perspectives, also geographically and gender-wise. I think I feel there is a conversation which is really truly oriented towards like how can we think together versus how can I kind of get my will, and that kind of collective kind of team feeling of how can we think together to get to the best solutions. I think that makes it great. Okay. Yeah.
Johannes, would you second that? I mean, your group board also grew over time. You have more people on the board. How does it influence the dynamic? I mean,
sure. I think first and foremost, it's important to note that for growth companies, ultimately the management builds the company and not the board, right? The board are the important people that enable you to do what you do in the day-to-day. But I think the board itself, and that was this, I think the same for Clue as for GetYourGuide, the board never built the business, right? The board helped the business build the business, but the board was never like the core executive team that built the business. For us, I think the board dynamics really changed over time. So in the very early days, we had a board that was actually a lot more focused on making sure that, all the basics were in place, that we actually had things like bookkeeping, which, funnily enough, we didn't really have in the first 1 or 2 years, and, that, there would be the right people in place, and also challenge us sometimes. I vividly remember shortly after our A round, our burn was, sort of like too high, and then we really needed to go against that and cut that. And the board was still very, very, involved. I think today, with very competent people like Lucian on the board from KKR, like the board at this stage of the company has a very different function. It's much more about supervision, about making sure that the long-term strategy works out, making sure that you have governance functions like an audit committee or a compensation committee, and that is something I would say the long-term trajectory of the company is safe and is on a very good path. So that's I would say much more long-term perspective compared to the earlier years of the board.
Okay. And did you, probably to Ida as well as Johannes, one more, did you, when you looked at your boards and you have independents on the boards as well as investors, were there personality traits also in the fundraising which you were particularly looking at, or commitments, or anything which is more than just money, I guess, in the personalities you brought on board?
Yes, absolutely. One of the things that I really like about our investors is that I feel that they have kind of a vision for their fund. They're very thesis-driven, and I feel that I sometimes joke that they are kind of impact investors in disguise, because I feel that with every investment they do, they try to move the world in a direction that they believe is a good direction. And I think having that kind of intellectual kind of layer to their investment makes me feel at home. I can feel that we share some sort of value set that makes me trust them. So I think it's quite important. And I mean, then there's the obvious thing that I think we have to mention is that they have seen a lot, and they have proven that they can scale companies, very impressively. I want to learn from them. Like I want to understand what they understand, and feel comfortable enough to ask and be like, hey, I've never done this before. Like, what have you seen? What are best practices? Maybe we try this, and then we try to make it feel more clue-like. They're also teachers, and actually we do. After our last board meeting, we invited the whole board to come and meet the whole team. So we did like a Q&A with all investors, because I really want my team to also know that this is our team. Like the investors, they are our team. Without the investors, we couldn't do this. We are because sometimes very fast people can start feeling, oh, we're just doing this to please the investors. I'm like, no, like this is like we are aligned here. I mean, I hope we'll talk to me in 5 years, but hopefully, we can stay being aligned. And I think that's so key, that the team also feel that they can trust the investors, that they can use the know-how and reach out to them.
You also do special sessions with your investors, no? I mean, you try to really engage them in one or the other way.
Oh, absolutely. I would say our investors, across the board actually have been very helpful, but also have been helpful in many different ways. I mean, to your earlier question, maybe, in sort of like what are we looking for in an investor besides the money, I would say the one critical thing that we've been looking for in every single round, and by the way, in every single round, we've never taken the highest term sheet. So in every single round, we kind of like looked at, number one, do they actually really understand our business, right? So when we did the round with Lucian, like we literally, one of the reasons why we took the guys is because they're extremely smart, and they really understood the business and understood what we as founders were going after. And that's really critical, because the worst thing that you want to have is someone on your board who doesn't have the same vision and who doesn't have the same perspective, and really whom you have to explain the business to instead of someone who can help. And then I think the other thing is the value add that you're referring to now. In terms of value add, I think as an entrepreneur you have to look for different things in different stages. I would say for the early investors, their biggest value add, hands down, is actually the capability to give you more capital over time and to raise more capital, and that would be what I've seen is like the one biggest differentiator. At a later stage, where you have someone like a KKR, like other people coming in, it's like very different questions come in. It's like, is this someone who can strategically lead us towards an IPO, or even participate, throughout an IPO? can they actually prep us on the way there? Do they have sort of like the competence in-house and the sort of like the expert functions in-house that they can actually help us on the financial side, for instance? Or are they people who have really an international footprint, which is also a reason why we, for instance, took KKR on board, that they can help us in many different markets and internationalizing and stuff like have good relationships, etc. So I would say sort of like there are different stages and different requirements for boards, but in the early stage it's really all about, I would say, someone who really shares your vision and who also has the pockets to actually sort of like make sure that you can maintain your track.
Mm-hmm. Okay, thank you. Lucian, would you second that? I mean, what's your own perspective on you as an investor and board member? If you look at a new investment, how do you come in beyond money? I mean,
so I really mirror my perspective is the mirror perspective of what Johannes and Ida have said. I think everything ultimately starts with a common vision and trust, and that's the foundation for a good partnership. And without this, no value add in the world will get you anywhere. I'd say secondly, we see ourselves as sparring partners to the management team. So as Johannes said, if there are important strategic decisions, important management decisions, important decisions around the capital structure, we have seen a lot, and we've seen many companies, we sit on many boards, and so being able to essentially share our knowledge from similar situations, I think that's something that we can bring to the table. And then lastly, we see ourselves really as hands-on sparring partners and facilitators. So when GetYourGuide was really expanding aggressively in Asia, we leveraged our contacts on the ground in countries like South Korea or Singapore to really make local connections and help the people on the ground embed into the ecosystem. So I think that's the advantage that someone like us can bring to the table, that really has a global platform and a deep network, not only here in Europe but also in the US and Asia. So I'd say these to me are and ultimately it also has to be fun, right? So it shouldn't be boring, and that really ultimately comes back again to the people around the table getting along with each other and having a true partnership.
how available are you to get a feeling for,
KKR? Do you have any idea?
Too available.
So I would say, so if I could recommend anything to Lucian and his long life ahead of him would be to be less available, just a little bit. I think you can send those guys emails at like 3 a.m. and I think the longest response time I've seen so far is an hour or so. Yes, very available.
Okay.
I'm not as available.
Julia, you recently, as I said, joined the European ecosystem. Mm-hmm. What's your very fresh perspective? I mean, you work with a number of companies in the Valley or in the US. Mm-hmm. How do you see your role? And you were active in the US in boards, and you're going to be active here. Or you start to be active here. What is different here, if you come in as a board member or as an investor to the companies?
So I haven't gotten involved with any of the Mosaic companies yet, but I think from what I can tell from what everybody's discussing, there's one thing that is kind of very universal, and it's that trust is key. Because I think especially from the venture perspective, when you start to assemble a board and you go in, these startups are frequently sometimes almost still in pitch mode. And they're afraid to sometimes tell you, oh, we're having trouble around finding the right person for this one role, or we don't know whether to do X, Y, Z. And at the beginning, it's a lot of hand-holding and getting them to trust you. But once you can open up that dialogue and make them realize that, we've invested in you. Like, it's like Ida said, like, we're on the same team now. So, like, don't be afraid to share if there is something going wrong, because that's where hopefully we can step in and try to provide guidance or make introductions so that you can overcome whatever you're going through.
Mm-hmm. And do you see a mentality difference in terms of US companies and European companies? And maybe this also refers to differences in gaining the trust of the companies?
Yeah, I think, so I've been in Europe now for about 3 months. So my initial kind of reaction is I think European entrepreneurs tend to be a little bit more reserved and a little less aggressive compared to Americans. And that's not necessarily a bad thing. I think it means that they're actually a lot more humble about their business and sometimes end up underselling themselves or underselling what they're capable of. And I think from my perspective, you know, I get really passionate when I find great entrepreneurs and great companies that clearly there's something there, but they maybe just need that extra push or a helping hand to make them realize exactly what they have. But I think, you know, the entrepreneurs and the companies here are just as driven, just as motivated, but just because it's a smaller and younger ecosystem, they're not as, you know, compared to the typical Silicon Valley entrepreneur.
Okay. Lucian, would you second that? I mean, you have the nice overview between Israel, Europe, Germany quite a bit, and the US, and I would say, having met Johannes in the past, is decently aggressive as well and wants to conquer the world. But is there a general observation which you can give on the differences in mentalities?
I think I would agree, generally speaking, with maybe the Europeans, you know, maybe overall being a bit more humble, but it's also very case specific, you know, and it's actually very, and you can't even generalize within Europe by country, you know, French board might work very differently from a German board or an Israeli board. And then within each country, it really boils down to the entrepreneur. You know, some are extremely organized and, you know, keep their board on track, like this guy. Some others, you know, need more help. It doesn't come to them that naturally, you know, essentially also managing a board and working with a board. So I think it's tough to generalize. I think what is the case, I think, is the more diverse a board is, both from a gender perspective, but also from a geographic perspective, the better the board gets. So at GetYourGuide, we have Germans, we have Americans, we have Irish actually, so, and Italians, and so that gives a very, you know, balanced mix, because everybody has different perspectives, different styles, and I think that's how you get, that's the beauty of Europe, that you get Americans here and can learn from what they're doing in the Valley, but you also have a lot of Europeans that can, you know, bring meaningful input to the table.
Mm-hmm. So it's a very international board, but it's, and then we briefly spoke about this, Johannes, it's fairly male, fair to say at this stage.
Yeah, I think so. Like definitely one of the challenges that we originally as a company actually had. So the quick background of GetYourGuide is that we were founded by 5, you know, male co-founders at a very sort of like male tech university, and so like you were not exactly sort of like, I don't even think I could spell female at the time when we founded the company. Today we actually went all the way from the spectrum of being a complete male sort of like geek company to actually being majority female. Unfortunately not yet at the management level and particularly not at the board level, so this is something that we still need to develop. But in general, sort of like I think to the element of diversity in general, I found that, you know, gender diverse teams just work a lot better, and I'm very glad that today our management team is a gender diverse team, and also almost all of the teams in the company are very diverse. Even the engineering team today has more than 30% women, which is quite a lot for an average Berlin or European company. So I totally recognize that as actually being something that we as a board still need to develop.
What did change with the increase of female engineers? Or how would you describe the change in the company?
Well, I think it's so I mean, like I would love to hear Ida's opinion and like you know, other people's opinion, but from a man's point of view, I would say with, you know, again, you can never generalize, right? There's not this thing that women are better at this or like men are, so like, I mean, this like it's always depends on the person. But I would say in general, what I have found women to be better managers than men in our company, because to me the key principle to a good manager is asking good questions and listening. And I would say that particularly in tech, a lot of men are sort of like, you know, sort of like very much these alpha males that, you know, come and speak and present. I would absolutely count myself into that bucket, by the way. But it's actually really, really positive if you have a more diverse set of people around the table who have these skills, who can listen, who can develop people. And we found a lot of our top managers are women, and they actually have exactly these qualities.
One of the things that I've learned working with my male co-founder and partner over the last 5 years is that we make each other better. And I think that's really key. I think one of the really magical and beautiful things about diversity is that not only do you have, oh, you are also great, but because you're different, you're going to make me better, and I'm going to make you better. And that, because you think about things differently, so you'll challenge each other, and in the end, the decisions you make are better than the ones you could have made alone or that he could have made alone. I think that's just fantastic. You actually become better when you have somebody next to you who's just totally different. It's also difficult, but that's the potential. And so if you want to be really great, hire somebody who's really different. Might be a woman, to work closely with you.
Were you aware of this from the beginning onwards? Is it something you became more conscious of, also with regard to the topic you're dealing with? How did you become so aware?
No, I'd say we learned the hard way. It's not been that easy either. When people are different, you have to find your way, and you have to find. It takes a while till you really truly understand what is this person actually saying, why they're thinking we should do this, and then you work your way towards a decision that's then maybe different from what you thought in the beginning and from what he thought, and you ended something third that turned out to be even better. So we've gotten help. We work with great coaches and people that help us learn together and learn to kind of get the best out of each other. So it's not something that you kind of just. No, it's pretty hard work to learn that, I would say.
Now a bit going into maybe real life examples. What were recent things, and could be any which either you've seen as an investor or while leading your company, what were particular pain points you might have recently experienced or experienced in the past where the discussion in the board really made a difference, where we really came out, and there might have been a situation where you even doubted them, where it was a real major insight? And if I'm happy, whoever, for you to start.
Well, a solution can start, but it won't be with GetYourGuide because our discussions are always so smooth. No, I can speak to one example that's actually already a few years back. So GetYourGuide really shortly after we raised our Series A round, we made the typical mistake that we hired way too many people too quickly, and we had no idea who we were hiring. We also had no strategy, by the way. We thought we had a strategy, but it wasn't really a strategy. So it was just we were growing fast, and we thought, if we just hire more people and just get bigger, then we'll just grow even faster. And it turned out to be exactly the opposite. We hired a lot more people that didn't really fit our culture, our model, and then we really slowed down. And that was a very, very scary moment in the company. I still remember having this board meeting. We were sitting together, and the board basically said, okay, we need to lay off 20% of the staff here because otherwise the burn rate is getting too high, and you guys will fail. It's going to be really hard to raise a B round on these type of economics and with this type of trajectory. So that was back then, looking back, was a very, very tough thing, but was a transformative event for the company, because we actually went back and we had to make the really, really tough choice of actually, what was our strategy, how did we really want to grow, and then B, who are the right people in the boat to make this company grow. Although this sounds from a high level, sounds very intuitive and easy, in this in this crazy startup environment where you're hiring every day and investors and media and pitches and blah 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 blah. It's actually quite tough. And for us, to the present day, I think one of the distinguishing factors of GetYourGuide is that since that time we became extremely meticulous and extremely well planned, and every single year we have these really strong strategic planning sessions that start in June right now for the next year, where we really plan the headcount and everything else, pretty tightly. And that actually came from that moment in time where we actually really forced to rethink everything that we had done so far. And in that sense, although that was a very bitter pill at the time, and it was actually a very tough load on me for a couple of months to come after we made these layoffs. It was also transformative for me as an entrepreneur.
I'd say, generally speaking, it's ultimately growth pain points are mostly about people, hiring the right people. And in particular in tech, this can be incredibly difficult, and in particular in Europe, because the talent pool for top-notch product managers, top-notch CMOs, whether it's in software or in online, is actually relatively thin. So I think that's sort of one area where we investors try to be as helpful as possible with our global network, headhunters we know, etc. To really, and also our experience from having seen quite a few CMOs and CSOs and pitfalls to watch out for. So I think that's one area. And then another example I can think of recently was with Trainline is M&A. So we decided to enter the European market by acquiring Captain Train, and that was a discussion where we as the board, I think, had a big deal of influence.
And for example, take the example of people decisions. How involved are you? Do you give a good recommendation? You should work with this and that person, or actually might you be as involved in seeing the people then in the final round to bring
it's
them?
It's ultimately always the decision of the manager. Or the CEO or whoever this person reports to. So we will never second guess the management team in terms of who they want to hire. But what very often happens is that Johannes pulls us in, or other founders pull us in and say, hey, I like this guy, but I like to get a second opinion on him, and give me your candid thoughts. So I think that's typically how it works.
Okay, perfect. Julia.
Yeah, so I actually have a story about kind of an opposite experience with hiring. So one of the companies I was working with in the States, they needed to hire somebody to help deal with local partnerships, but they didn't want to hire unless it was the absolute 100% perfect fit. And so what ended up happening was the two co-founders spent so much time doing local partnerships and kind of community work, and not as much time working on product and kind of the more strategic decisions, that it detracted from them being able to scale effectively and increase and work on certain metrics. So we stepped in and we basically helped connect them to more people. We offered to interview people as part of the process to, basically so that they could have more time back to focus on what they're trying to do. But I think you have the companies who are scaling too quickly sometimes, but then you also have some companies who don't hire aggressively enough because they just want to build that perfect team. So
it's like a moderating factor, kind of.
Yeah.
Ida.
So there's always this kind of balance between growth and trying to make money, and when you do what and how to do that in balance. And when we were raising our Series B, there were definitely investors who just going crazy on growth, and other people you need to figure out to make money, and that became a little bit where are we on that scale? And it was something we continuously discussed with our board. And then Trump won the election, and then suddenly everybody, just including ourselves, had this kind of, we probably want to go towards being a little more independent and start to figure out how to make money, because we don't know where the markets are going to go. And I think this was a really, it was this moment where we were, together with our investors making this quite significant, this microphone is shitty, sorry, making this shift in where are we going to put the focus. And so that, it was not like it was they didn't come and say, actually, Ida, you might want to rethink. It was kind of this moment that we kind of had together over the course of maybe a month, where we all felt oh, the world is shifting here, we might want to adjust a little bit. That was just a good moment of being in tune, I think, with the board.
Okay.
Yeah.
Perfect. Speaking about growth versus profitability, brings me back to Lucian. I mean, with a history in private equity investments versus now high growth environments, what's different? I mean, you sat on the boards of very established companies as well as venture companies. What do you see as a difference there?
So I'd say obviously in private equity, we typically only invest into profitable businesses from the get-go, right? So that's a requirement, whereas in growth, that's I would say in the vast majority of cases, not the case. And we really try to push the entrepreneurs to invest into growth. And I think that's, to your earlier question, very often actually one difference that I see between US or Anglo-Saxon investors and more continental European investors, that the continental Europeans are sometimes too conservative and are focusing too early on profitability and therefore might hold their companies back. But coming back to your PE question, I'd say it's really sector specific, because if you I invested quite a lot into online companies, so Trainline, Scout24, or Fotolia, and the dynamics are not different from a high growth company like GetYourGuide. Ultimately, in tech, companies are valued based on growth, not on the base of the EBITDA margin. So in the case of Fotolia, for example, we sacrificed 10 million of EBITDA to enter the US market. So we went from 45 to 35 million EBITDA in 1 year to really push that market with a new product. And that really accelerated growth. And then on the back of that, Adobe came to us and say, hey, I want to buy your business. So I think in tech generally, optimizing companies for profitability is a bad idea, unless it's a legacy business that you want to run for cash and there is no growth opportunity. In other industries like, retail or industrials, that might be very different.
Okay. I mean, Johannes, you have a very American or international board. Is that something you would second in terms of where you see a difference between US and European investors?
Well, I think the biggest difference between European and US investors is that US investors in general, and I would sort of categorize KKR, we have Spark on the board as well as Spark Capital. Those guys have all had billion-dollar outcomes, right? And that makes a big difference in the way how an investor thinks about a business, right? If you really believe in the billion-dollar, $5 billion, $10 billion outcome, that in terms of your strategy and how you steer the company is just night and day. Versus the average European investor who's, frankly, very happy if they get a $300 million, which is, so I don't want to criticize that outcome, but just later on, it's along the journey of a company, that makes a huge difference in terms of how aggressive your board is to actually invest, to raise more money, to actually go public, to not take that aggressive M&A offer, right? I mean, those decisions then really become very critical, and I think it's very important to have long-term oriented investors.
Perfect. Being conscious of time, probably running into the last couple of minutes, want to open the floor and see if there are any questions from the audience to the panel.
I took your microphone.
Yeah, just a question of US versus Europe. I'm a US VC here, investing actually in Central Eastern Europe and digital. What's the board struggle relating to the humbleness on the exit? Do you find that the European entrepreneur is not shooting as high? And also from the perspective of the investor, do you find that the US Silicon Valley investor is always shooting for those, quote, home runs versus Europeans which are looking for break even?
Well, I can briefly comment for the investor, and then Lucian can comment for the entrepreneur. But I would say in general, my take is it's actually more of a problem of the investor than of the entrepreneur. So I know a lot of entrepreneurs who want to build very big businesses, but I know a lot of investors who are afraid to really go all the way.
Totally agreed. I mean, the big difference in the market structure between, and I'm talking venture capital now, not growth equity, is that if you have a local VC fund, here in Europe, let's say in Germany or in France, the ability for them to get to a home run outcome is much lower than in the US, because they're dealing with a much smaller market. So there are a lot of things that have to go right for them, like GetYourGuide, to really hit that home run. And so therefore, I think that's my explanation. They're sometimes trying to be a bit more balanced, and maybe are happy with the 2.5 or 3x rather than saying, okay, I go the additional step to, get to a 10x.
And they often don't have the funds to really go all in, right?
Yeah.
That's the other part of it.
But I would say someone like Mosaic or an Excel or an Index, I don't think there is any difference in mentality between the European arms and the US arms.
What's your take?
Yeah, no, I definitely don't think there is a difference in mentality, and there definitely shouldn't be, because a lot of the companies that we invest in and we get excited about, we don't want them to be Europe only. Like, we want them to be very global, to expand to the US, to Asia, like other geographies. And so in that case, you need to be aiming for any kind of a home run, definitionally speaking. So.
But I think I would choose an American broker, though, to work with. I think I would choose an American advisor if I were to ever sell my company, because they, at least from the limited sample size that I have, they do seem to be maybe more ambitious on your behalf I think.
Oh, but I would say for you also it made a big difference that you had a very, very competent American VC sort of like in your A round, right? And that I think sort of like increased your perspective. Same for us with Spark, right? I'm not sure whether we would be on the same trajectory if we wouldn't have had these A round investors. Because a lot of the times, I think, let's be honest, for a European fund, I mean, like to have, as Lucian said, so like to have a decent multiple outcome on the A round is really great, and then they push towards the exit.
I stole the mic. I hope it's not the last question, because I'm going to ask you the other part of the trajectory or of your headline. When the board sink a company, have you been in a situation where you think, due to conflict in the board or due to board acting, a company was actually sunk, and what did you learn from it?
Fortunately, not so far. We have had one situation where there was a legacy investor. We wanted to internationalize a company, bring it to the US, and there was a legacy investor in that business that, was very conservative, and that required a lot of pushing by both the entrepreneur and us. It's not GetYourGuide, to really get there. And that was a very tricky situation both for us and the entrepreneur, but it shows you if you have a trust relationship with the guys that ultimately run the business and your sparring partner, you buy into the vision, you can overcome even those situations. But I was fortunately never in the situation where we sunk a business.
I have not been in that situation, but we had an investor that we took on early that we had to get out again. And I had several calls from entrepreneurs who were desperate, who had that investor on board because they were sinking absolutely because of that investor. And I was just like, that was close. So I think it's very real. I think a bad investor can definitely kill your startup. Yes. Yes, well, I'm happy to after. Yeah.
Maybe one question. Does this work? Yeah. Oliver Krause, R30 Little, Matchmaker Ventures. With respect to the change we see in the terms of startup topics, more from the consumer internet to deep tech, do you see an impact on the composition of boards, maybe in the direction of KKR? What does that mean, maybe in terms of the ambition, which is usually in the consumer internet very high, the scalability is very high, but in deep tech, things take longer. Do you see an impact there in terms of, let's say, maybe taking on people who are deeply rooted in an industry, who are maybe more cautious, maybe the stakes are higher or something like that?
No, I mean, we are invested in, I would say, two deep tech companies. One is Arago in Germany, which is an AI-based enterprise IT automation software company. The other one is Darktrace in the UK, which is a cybersecurity company with very deep tech. I wouldn't say, I think the principles are exactly the same, Ultimately, you need subject matter expertise. So, these guys are extremely good at travel and activities in particular, and Darktrace is very good at machine learning-based cybersecurity. So, and one is maybe, I wouldn't even say one is more one is more technically complex, but the other one can be commercially extremely complex. So,
yeah. To my experience, it's changing a bit when hardware comes into play. Yeah, you talked about software, but hardware.
So we're not investing into hardware, so I can't judge that.
Well, I would say from my experiences with boards, also other boards where I've participated, I'd be very careful to go down too much the road of like the subject matter expert on the board, because at the end of the day, the board has a supervisory function and shouldn't do the job of the management team. The moment where you have like this super deep subject matter expert on the board that is starting to dictate, what should be done in terms of strategy, you're taking away a really important job of the management team, which you shouldn't do.
It's a nice ending, I would say. Thank you very much.
Thank
for
you.
sharing.
Thank you.
Thank you.